So next, I want to take a look at gold, at the metals. I think when the stock market was turned around on election night, and in my opinion, that was the beginning of the euphoria phase in stocks, and we see what happened. That gold reversed and and then had that big move down, and that drove gold back below the 200-day moving average. And I think that probably altered the bottoming pattern in gold. Um, what I think has happened is that that knocked gold into what's probably going to turn out to be just a very difficult triangle consolidation pattern that'll probably play out um, over most of 2017. And I don't think we're going back below the December low here, and I also don't think we're going back below the December low of 2015. I think this is the bear market bottom. Don't think that's going to be violated, but I don't think we're going to have an easy time in 2017 like we did in 2016. I think that recognition phase in the stock market has pushed gold down into this triangle type consolidation basing pattern, and it's just not going to be easy to make money in the metals this year. It's going to be difficult trading. So I think we have to be very selective. Uh, we've even though our last three trades were losing trades, we still have made pretty darn good money from the bear market bottom until now, where the metals portfolio is up 130%. We could walk away from the year and still have more money than what most people make in 5 years. So I'm going to just suggest some caution here. I just don't think this is going to be an easy market to trade. There's going to be a lot of volatility, a lot of misleading wiggles back and forth, and a lot of ways to lose money, and very few ways to make money. So I think what we've got to do is we've got to be patient and wait for everything to line up at these major cycle lows, and then we can take a long trade in the metals. What we don't want to do is something stupid, and by that I mean we don't want to go long 15 weeks into an intermediate cycle. I made that mistake, and I did that back here in September. I was expecting, one more pop higher because this cycle was looking like it was going to be left translated, and I was not expecting left translated intermediate cycles in a new bull market. So I took a trade here in September, looking for, just a short-term gain, maybe a slightly higher high, and it just didn't pan out. It continued to chop, and then we got caught in that middle of the night stop run, and so that was just a mistake. Trying to trade long deep in the cycle is a mistake, especially if we're in this sideways triangle consolidation basing pattern. We just don't want to do that. We don't want to take long trades late in intermediate cycles. It's the risk is too great, the reward is too small. So in the metals portfolio for the rest of this year, I think we just have to be very selective. We've got to wait till everything lines up. We want to be late in an intermediate cycle. We want to see an extended downtrend. Preferably, we want to buy when the weekly stochastics are back down here in the oversold level, and the cycle count is in the timing band for an intermediate cycle low. I'd like to see sentiment extremely bearish. I think if we can wait for those conditions, then we can add to our gains by the end of the year. And maybe we can even have the metal portfolio over 200% by the end of the year, maybe more. Um, but if we make mistakes and we buy into overbought levels, we try to buy 15, 16, 17 weeks into intermediate cycles, I think that's just a mistake, and I don't think we can afford to make those kind of mistakes um, while gold is locked in this volatile back and forth basing pattern. Um, moving on to the miners, um, this has just made me nervous from the beginning. There was just no reason for the miners to get hit this hard if gold was just moving down into a half intermediate cycle low. This was a daily cycle low. There was just no reason for the miners to get hit this hard, and they should not have dropped back below the 10-week moving average. Now we've got the 10-week moving average looks like it's resistance. We're not able to, at least not yet anyway, we've not been able to close back above that. And usually that, you can see it here, that kind of action tends to indicate that an intermediate decline has begun. So I'll say again, we probably don't want to buy mining stocks until we get some oversold readings on the weekly stochastics. We want to wait till sentiment is extremely bearish, where nobody wants to buy. And right now, I see a lot of people making excuses for why the miners didn't follow gold up to retest these highs. And in my mind, there is no excuse for that. The miners should follow the price of the commodity that they sell up or down. If the price of gold is going up, then the profits in mining stocks should be going up. So there's no excuse, no rational excuse that I can come up with for the mining stocks not to follow gold up. Now I could see maybe a slight underperformance, like maybe perhaps gold makes a marginal new high and the miners can't quite make a new high. That would be an indication that an intermediate cycle is ready to top if the miners are starting to diverge a little bit. But a divergence this big, at least in my mind, something fishy is going on. And I think probably what is going to happen is the miners are being set up so that when gold makes the trip down into its intermediate cycle low, and we come down to presumably tag that lower triangle trend line, the bears are going to try to break this yearly cycle low in the mining stocks, and that's going to do a couple things. That's going to trigger a lot of stops. We're going to get a lot of supply coming into the market when that stop gets ran or triggered, and that would allow the bears or the banks to load up on mining stocks at the next intermediate bottom, and then the next intermediate cycle may break out of that triangle. So I'm going to play devil's advocate here, and I'm going to say that from this point on, the banks are trying to set up a long side entry into the metals, into the mining sector, for the intermediate cycle that finally breaks out of that triangle consolidation. And to do that, the best way to take the biggest position possible without pushing price against themselves would be to run these stops back here in December. So you may disagree with me, but I think that is probably what is going on with the mining sector. I think the banks have a long-term plan in place, and they're going to try to get positioned very heavily in the mining stocks at the next intermediate cycle low, and the way to do that is to run these stops at the December low of last year. So let me stress that I think we just need to be very patient and very selective with the metals market this year. We've got some good gains. There's no reason to risk losing any more of those gains 15 weeks into an intermediate cycle. Let's just have some patience. Let's sit on the sidelines and see if this weekly stochastic doesn't come back down and tag or penetrate this oversold level again sometime in maybe April or May. And then at that point, I think we'll get our next really good buying opportunity in the metals market. But I don't think it's a good idea to be a pig right now and keep pressing the long side of this market 15 weeks into this cycle. We tried that back here in September and it blew up on us. Let's not make that same mistake twice.